Hello, everybody, and welcome to the 22nd edition of LM's Weekly Wrap, our weekly program to cover all the developments that have happened in the markets, in the domestic markets, the international markets, and the repercussions on the different stocks and overall corporate developments. First of all, we would like to extend our season's greetings to everybody, to all our viewers. We wish a very Merry Christmas. Merry Christmas to all of you, and we wish that the festival season brings joy and cheer to everybody, and lots of blessings to all our viewers and the investor community in general. This has been a difficult week for the markets. We've seen a lot of uncertainty with respect to the international markets, and all of a sudden we've seen the domestic markets having turned quite jittery and nervous, which has been reflected in today's market as well. But of course, we need to keep our patience, keep booking profits also at regular intervals, as we have been advising you, and which will be guiding in the other part of this program. So first of all, we start off with a wrap up of the domestic as well as the international developments with the Jash. So he'll be guiding us through some of the important events that have occurred in the last 1 week. So Jash, welcome to the show.
Thank you, sir. It's great to be here. As usual, I'm going to start with the Nifty levels. As you can see, the markets have not been very good today on us, and Nifty used to hover around 18,500, 18,700 in the closing of last week and opening of this week, and last 3 days we have seen a continuous fall. We had said that, mind the 18,000 levels, it's a strong support. In the morning also I said that it might bounce back, but it has broken and we are seeing at 17,800 levels. I think it's a word of caution. Even if there's a bounce back, I think it will be a relief rally of 200, 300 points, but I think you should remain very cautious as usual and refrain from putting in new money at this point in market. Of course, if we see another 400, 500 point dip, you can start putting in some kind of money, but I think otherwise sit tight with whatever investments you have. Coming to the global scenario, the COVID fears are back. We have seen a spurt of cases in China, Japan, South Korea, United States, Canada. That is the main reason for the sell-off in the Indian markets. The US IT companies are under a lot of pressure. Subsequently, Indian IT is also seeing the brunt of it. The COVID fears remain strong, as even in the Indian market, the government has been holding a high-level meeting, and they have started random testing from the airport. The first case from the US flight has been reported in Gujarat, a 61-year-old lady. So I think the market will go into the COVID mode, cautious mode again in the coming week, and we need to wait and watch what happens. But I think you should just wait in terms of investment right now, and the regular investment that you are doing should continue. Apart from that, new investment should be taken. Avoided. With this, I would hand over for the domestic market sectoral review to Nirav, sir. Thank you.
Thank you, Jash. So as rightly pointed out, it's a grim scenario for the markets, and yesterday, incidentally, we had a chance to interact with a lot of investors, and we could see a note of overconfidence in their tone. They were of the view that markets just can't correct.
And I think they had a view that it won't break 18,100.
Yes.
Even we were of the view that 18,000 is a very strong support, but the market just corrected.
Very true. So I think as we say that both there are two sides of a coin. So we've seen the bullish side of the market, and this is a correction phase which we are seeing in the market, but no one knows what is going to be the extent of the correction. What is going to be today's market, in a sense, has been a kind of a rude awakening for a lot of investors. I think investors really need to sit down during the weekend and have a close look at their portfolio and also the strategy. It is time to study the strategy. It is time to study the valuations. It's time to take into account certain things. Study the finer points of the
Correct.
market.
I think this is what the market is all about.
Yes.
You can't be fearless or overconfident in the market.
Yes. So as we've been advising regularly that it's advisable to take some money from the table, keep booking profits at regular intervals, sell on rise strategy definitely needs to be followed. Now these are all important aspects. These are not theoretical aspects of investing, they are the practical aspects of investing. And we should overcome our biasness also, because
That's
most
right.
of the investors, they tend to be biased. They tend to get biased, they tend to get carried away by the market bullishness, and they always have a bullish frame of mind. They don't tend to become realistic. They don't tend to take into account what are the developments, the underlying developments which are happening in the market. I'll just give you an example. This week started off with the Bank of Japan having increased the benchmark rate from 0.25% to 0.5%.
That's right.
Second, we saw that most of the companies in US, they are giving very negative commentary. So whatever good results are coming on account of cost savings, and those cost savings are being achieved on the back of removing a lot of employees, cutting down on the cost cutting, cost rationalization, and all such initiatives. So this also does not really spell good news as far as the global economy is concerned. Third, we have seen is the change in the stance of the Chinese authorities. Zero COVID policy, which they had adopted, suddenly they have liberalized it, and there has been a spurt in the number of cases in China. So all these things has really made the Indian markets jittery and nervous. Coming back to the same point, till yesterday, the investors were of the view that if US markets are steady, if the rest of the world, if the European markets are steady, then how can Indian markets correct?
But they were never at the valuation of the Indian markets.
Yes.
The US and
So
Europe
Indian
markets
were as it is trading at quite high valuations.
so it's relatively higher than the other markets.
And today we have got the answer. In the case of mid cap and small cap stocks, we have seen all those stocks which made registered gains. All the gains which are registered in last 3 months have been wiped off in 3 days.
3 days. That's
just
right.
3 trading days, and everything has been wiped out. And most of the small cap and the mid cap portfolios have come into the negative. So this is definitely a warning sign, and one should not try to again time the market or go against the market flows. One has to overcome one's biases. I repeat again. Just coming back to the markets, coming to the sectors, I think first of all we start off as usual with our auto sector. I think this week was negative for Maruti, because with the developments which happened in Japan, the yen started strengthening, and a strong yen definitely means that it's a negative for Maruti, because their procurement happens in yen. They have to make payment in yen. So with the yen strengthening against the rupee, I think it becomes a negative as far as the margin picture for Maruti is concerned. Apart from this, I think most of the auto sector stocks were under some sort of pressure. We've seen M&M, where there's a good deal of FII interest in the stock. There's good deal of FII buying which is happening in the M&M stock. Apart from this, I think auto ancillaries, one needs to have a look at auto ancillaries. Auto ancillary is one sector which depends quite heavily on
China.
Imports from China. So I think there's a word of caution. There I think one needs to be a little bit careful, and if one has the auto ancillary stocks in the portfolio, one needs to selectively book profits, because most of these auto ancillary stocks have also hit 52-week highs. So it's time to selectively take or book the profits over there. Rest, I think tire stocks and all, they've been doing okay types. Then we come to the banking space. Banking has also seen a decent correction, but I think the brunt has been borne by the PSU banking stocks. Those stocks which just went up.
They were the darlings of the market.
They were the darlings of the market, and now suddenly most of the investors have been left disillusioned about how they have fallen, about the pace with which they have fallen. So one needs to be cautious in the PSU banking space and the PSU banks in general. possible. But overall, I think the private sector banks have held out quite well in a otherwise difficult market. Third is capital goods. Not much action happening over there. Just correction which is there in line or in sync with what is happening in the market. The IT sector. I think IT sector is a sector which has been under tremendous pressure, and this is on account of what developments we have seen in the US. So we've seen a correction of close to 45 to 50% in select counters, IT counters, which include the likes of Wipro, Tech Mahindra, then Coforge, Memphis, Tata Elxsi, L&T, Mindtree. All these stocks have corrected 45% to 50%, in the range of 45% to 50% from the 52-week highs. Now, this is definitely not good news as far as the IT sector is concerned, and this is more so when we are staring at the third quarter results being announced. So one wonders what fate will happen when the results are actually announced. That's or right. When the commentary is actually released by the IT sector. So the word of caution over there. We have a lot of experts who say that valuations are looking quite compelling, but I don't think to seem to agree with that, because one has to look at the commentary of the companies. What is coming out from there is more important. Next is metals. Metals have direct correlation with China. That's so right. With China under pressure, I think metals are definitely going to be under pressure. And even over there, we've seen stocks like Nalco, Steel Authority of India, which have corrected close to 45% from the 52-week highs.
Of course, China is the price maker for the metals, so yes. Definitely.
And we have stocks like JSW Steel, Jindal Steel and Power, which have shown a lot of resilience in a very, very difficult market. So over there, of course, there is some stability in these stocks.
Definitely.
But overall, metals, I think the view remains one of caution, and abundant caution is required, of course. Right. And another sector which has got correlation with which tends to move in line with metals is realty in our markets. So realty space is also showing some signs of fatigue. There are proper chances that there might be oversupply in the real estate space. At the same time, the rising interest rates also do not augur very well for this sector. Now, after this, we have FMCG. FMCG has been a kind of a stable picture, not much really happening over there. These are difficult times, but the sector has held out relatively well. There's a correction which is there in line with the market, nothing substantial. And after having given all the sectors where there is a lot of pain, I think there is one sector which has done amazingly well, that is the pharma sector.
Correct.
So I think pharma stocks have bounced back big time. We've seen the frontline stocks like Divi's or Lupin or the Sun Pharmas, everything. All these stocks have performed quite well, and there are a couple of stocks which have the potential to bounce back from the lows. From those stocks which could be potentially turnaround candidates. One is Strides Pharma Science. This is looking quite good performance in an otherwise it's a difficult market. Okay. And the second stock is Shilpa Medicare. This is also trying to come out of all the problems which it has been facing. So these are a couple of stocks which could bounce back. At the same time, diagnostic firms have been doing kind of a topsy-turvy picture, sometimes going up, sometimes going down. On that the how they perform will depend on what is the progress of the pandemic. At the same time, hospital stocks will also perform in how the pandemic is going to shape out. So these are some of the sectors and stocks which have got a direct correlation with what is going to happen with respect to the pandemic. At the same time, we have companies like Linde India, etc., which were big beneficiaries whose fortune changed with the pandemic. So they have also been moving around in trade, but I think rest it's been a grim scenario. Finally, coming to a couple of listings, we had Sula Vineyard, which had the listing, and it was both tepid listing for both Sula Vineyard as well as Landmark Cars. But I think both of these are kind of concept stocks, because Sula Vineyard, we've seen the kind of effort which has been put in by the promoters in building up the brand. A market definitely has certain issues, like it's an offer for sale. Secondly, the revenues have been flat since the last few years. So the growth is not coming. But I think we've seen some good institutional interest, FII interest in these counters in an otherwise very difficult market. Second is landmark cars. So this again is a sort of a fancy stock. If it catches the fancy, then we could see a good valuation, because till now we do not have this kind of a pedigree in the market.
We don't have any dealership listings.
Yeah, dealership stocks have not been listed. So I think it could catch a fancy of the market at some point.
It can also get a single listing premium.
Yes.
Yeah.
And finally, some developments happening in the paint sector. The paint sector is getting crowded. We had 3 players in the paint space. One is Asian Paints, then Kansai Nerolac and Berger Paints, which are the primary players. And now we have Indigo Paints, which has come into the paint sector. We have JSW Paints. And new entrants again, Grasim. This is going to spend about 10,000 crores coming into the paint sector. We have smaller players doing a catch-up. JK Cement recently acquired a player in northern part of the country, Acro Paints. And we have Astral, which has acquired a player in the southern part of the country, which is Gem Paints. So suddenly a lot of action happening in the paint sector, and this could increase the competitive intensity in the sector. So how the things play out is something which we will have to wait and watch. Overall, to sum up, advise abundant caution, and advise investors to have a hard look at the portfolio and do the needful. I think that kind of sums up our session. I hope you enjoyed our session. Kindly revert back to us with your feedback. And Jash.
Yeah, thank you. Like, share, subscribe, and also look out our app for more calls on investing and trading. Thank you.
Thank you very much.